I'm Dan Fitzpatrick at Stock and Option Market Mentor on Wednesday, April 26th. I lost a few months there. Look, today I want to talk about telecoms, specifically Windstream and also CenturyLink. And here's why. Aside from the fact that I saw this thing popped up on my scan to where we had a big intraday reversal, doing the research, and I saw a pretty good article on the Motley Fool. So you can check that out. Just go to Yahoo Finance. You can read that article. And in the article, they were talking about like the high dividends here of Windstream. This stock goes ex-dividend tomorrow. So, you know, the company's paying 25% quarterly dividend. And on a stock that's, you know, basically $10, that amounts to a 9.10, 9.1, actually like a 9.6% yield from current levels. That's a pretty good yield. But you mentioned, you know, I noticed Motley Fool's talking about this, about how, you know, there are fundamental issues like, is their quote dividend safe? And I will tell you this, since you're holding a stock, you have to hold it all year long in order to collect that 9.6 dividend. Think about where it was in January, right there if you bought it. Now, where is it? Down there. You got a couple of dividends, sure, but the stock is trending lower. So I like the high dividends, but I'd only like to buy them on these big, massive dips like now. Would I buy this now? I just think it's risky. Now, CenturyLink, which I've liked for quite a while, talk about this all the time in stock market mentor strategy sessions. You guys that are members know that. But I'm looking at this now, 6.9% yield, great. But with the stock coming out of a volatility squeeze to the downside, does it make sense to hold this stock that could go from 41, you know, down to $39 and really have there kind of be nothing wrong with it? Otherwise, it just continues to kind of stair step higher and then sideways and all that. This is just not where I want to be right here, right now. If I want to be in the telecom space, I think it's good to avoid these rural or regional telecoms and go for the big dogs. Look at Verizon, pays 4.5% dividend. It's up at the top of the range right now, and it's kind of poised ripe for a little pullback. But this is a big company. It works. It's also telecom. You know what? See here, domestic. We don't have no Molotov cocktails in Madrid flying into Verizon's company headquarters. This is a domestic telecom. You think they're not going to do well. Think that dividend of 4.5% is in trouble. I don't. What about AT&T? This is a 4.6% dividend. Look at the trend here. Look at the 50-day moving average. The bottom line is, and I know, you know, we've got some people, a lot of people who are making good money at Stock Market Mentor on these yield hogs, these high, you know, 10+% a year dividend stocks that Jan 2138, one of our revered and esteemed members, comes up with, and a lot of folks are banking a lot of money. But what I'm saying is, with respect to telecom, you know, they're not all created equal. Don't just go for the big dividends. Realize that there are two ways that you're going to make money on a stock. Number one, the dividend. Number two, the capital gain or the price appreciation. We want to see this type of thing. When you've got price appreciation like this, it can make up for a yield that's only 4.6%, you know, as opposed to a 6.9% or a 9.1%. I would rather take Verizon or AT&T any day. Any pullback, say to the 50-day moving average, that's when you pull the trigger on this thing and then just enjoy the 4.6 yield ride. So anyway, members, get over to the strategy session. Have a lot to say about metals and mining and also housing, various other things. So get over there now.